Great. Thanks, Becca. Good to be back. Wow, what a huge progress from last year. We were in a small room and now in this beautiful location. Well done to Elevandi team. So today we have another panel on Southeast Asia, and it should be really interesting. Southeast Asia is one of the most interesting FinTech regions, perhaps the most interesting region, but it's also quite a difficult region with lots of cultural diversity, lots of regulatory complexity. And today we'll be privileged to hear a lot of different insights from many different sectors and domains in FinTech. So we have equity financing, payments, we have lending, so and wealth tech, not to forget you, Bob. So it will be really interesting. Typically, introductions are boring, but I think for this session, we hand it over to the panelists to give a quick intro of their business and themselves.
Sure, I'll kick off. Thanks, Dan. And thanks to Elevandi for the invitation here. So I'm Ankur. I'm president of Julo. Julo is Indonesia's leading financial services player. We provide digital credit in the form of a virtual credit card to the middle market segment. Julo's grown tremendously. We're at about 120 million revenue company today, solving a pain point which we believe to be 120 million credit gap. So we're a small piece in that big puzzle which is yet to be solved in Indonesia.
Great. Why don't you go next, Bob?
Well, thank you. I'm Bob from Pi Financial. We are Thailand's largest independent retail securities brokerage, and we are one of the leading players in the digital transformation that's happening right now in the securities industry in Thailand. I always say that we are a 58-year-old startup, and we are servicing with 400 of our investment consultants, our 80,000 customers through a model that we call digital with a human touch. So that means is that we are combining the ease of trading and investing through a digital platform, but also having access, face-to-face access if needed, to our investment consultants that will give you tailor-made advice.
Great. So, Jess.
Hi, everyone. My name is Jesayes. I'm the CEO of Oi. We are one of the largest payment processing company in Indonesia. We process close to $2 billion a monthly in terms of volume transaction that we process. The key differentiator about our company is we process both online payments and cash payment as a one service. So it's an end-to-end solution usually for merchants. Thank you.
Last but not least.
Thank you, Dan. Hi, everyone. My name is Pandu, CEO of brooom.id. We are doing B2B financing, specifically in automotive industry. We are doing working capital lending to used car dealerships, specifically in Indonesia. We are onboarded 7,000 dealership across Indonesia and distributing around 20 million USD on monthly basis. And since this is a collateralized lending, our NPL on last year is less than 1%. Thank you.
Great. So that was the easy part, short and easy part. So now let's talk about some of the challenges and insights and lessons you learned. Maybe we'll start with you, Pandu. Going into a new space where the licensing regime was not really defined, you had to really create your own path, find a way to make it work, bring other people and parties along. So if you could share a little bit how that went and what were some of the lessons and some of the details, whatever you can, without getting into trouble.
Thank you, Dan. So, I think the nature of our business definitely is a lending company, but we don't have any lending license. And then since this is a pretty much new or bespoke financing type of product, at the beginning of our inception in Indonesia, 2021, the regulators actually banned our website. And but then we need to have a plea, apply for a apology to the regulators. But then we showed that this is to again having a lot of impact specifically to the SME. And I think from that point, the regulators thinks that okay, there's probably a way for you to do it as long as giving out the impact. But we also want to be a good team player. So we also changed a lot of our wordings in our product so that we don't really looks like a lending company, but we are working under the trading business process, and then we're doing it consistently across the board. And I think as a startup, we also want to be agile and try to be as flexible as possible. And then that a year after that, even the regulators thinks, oh, okay, then you've done a great job. Here's another license that you can use for your other business. So it is really that I think as a startup, we need to really agile and try to be, again, a good team member.
Good. It's good to see you talking about this nicely with a smile on your face. I remember other times where you were way more stressed, and thanks for sharing this. So maybe now moving to Jess, if you can share a little bit more on how you balance the more risky transaction with the more safer transactions, how clear the licensing regime is for that, and how you mitigate risk and ensure compliance.
Sure. We're in the payment processing company, so we work very closely with the central banks of Indonesia. All my licenses, all the activities in my company, everything from is being audited only with central banks. So we work with 116 banks in the country. We process close to about 1 million transactions per day now. So at this moment, we need to be very careful in terms of like how we choose our clients, but again, as a market leader, as you're on the top 3, usually the client now start coming to you. Then we need to do a proper KYC, we need to do a proper KYB and everything. And everything that we did at the moment is we reported it to the central banks. But unique thing about us is we have a license in the central banks that do online payments and cash payments together, combined. So that means people can start in the country like us, where 80% of the transaction is still on cash basis and 20% is on digital. So digital transaction and cash transaction happen side by side. So I think at this moment, we try to tell the regulators that we are the bridge that between the cash to digital. So hopefully working side by side with us is actually giving them a lot of insight. So as long as we can bring value to the regulators, then they're very nice to us. So
good. So Bob, we'll give you a pass on this round. Moving straight to Ankur. Can you share a little bit in Indonesia in the lending space, how the landscape evolved, perhaps from more simple, P2P lending model to more sophisticated, more different structures and complexity with caps and other factors that make it a bit harder?
Well, how much time do we have?
2 minutes
till the rock session finishes. No, but I think I'll give the short version, which is, I've been involved in Indonesia lending space now for about 8-9 years, and Julo's been doing it for 7 years. During this time, we've seen massive changes happen in the industry, right? We've seen the infrastructure itself in the industry going from non-existent for digital lending to something which is resembles strong infrastructure, and some things that we see a path towards where it could be pretty high and robust levels, like how India and many other countries we've seen or LATAM markets, where, for example, the credit bureau penetration or the credit bureau existence itself wasn't there for the middle market segment or the mass market segment in Indonesia. About 3-4 years back, we start seeing these alternative credit bureaus popping up, and now we have about 15 to 20% credit bureau penetration, which is still very low. And if you look at markets like India, credit bureau penetration can be as high as 70+%, but 7 years ago, they were less than 20%. Credit card penetration in Indonesia today is less than 3%. So if you imagine that, less than 3% of the population actually have credit cards. And in the mass market, that translates to about 0.1+%, right? So the opportunity there is obviously very massive, but the challenge always is, how do you capture this mass market segment? How do you approach them? Are you able to underwrite them without the existence of credit bureau? Like in Japan, 99.9% have a thick file on them in the credit bureau. In Indonesia, that you'll be lucky if 15% of them even get some sort of a basic information, like are they male, female, or where do they live? That's about it. So I think the evolution that we've seen over the years is it's trending in the right direction. Things are getting better and our ability to underwrite is improving. The data infrastructure, telcos providing data, e-commerce companies providing data is also becoming more and more robust. And the product itself is evolving from a simple cash loan P2P products to what we are doing now, which is a lot more evolved credit card type, a virtual credit card solution. Let me pause there. I see you know.
You got the hint. Make my job easy. I'll pass it on to Felix.
Yeah, thanks. So of course we're at the Japan FinTech Festival, so we have to talk a little bit more about Japan even right now. So Japan, as you all know, has played an increasing role as an investor, debt financier, an equity investor in Southeast Asia, and it's playing a major role now. So I'd actually like to hear from you, maybe just starting with you. What is your ties to Japan and your company?
So one of the largest shareholder is from Japanese, I can say the name. Yeah, it's a SoftBank, and they're very go through with us. They go very, very deep in us and working very, very hard with us. And also one of our banking partners is MUFG, which is in Indonesia. They have a bank called Danamon. So Danamon is one of the banks that we work very, very closely with at the moment. So we see that they believe on what we do by, we believe that in one country that payments or any type of a money movement will always be online and offline together, digital and cash together. Where in Japan, we see that even though there is a very high technology, high online transaction, but cash is is still there. People still use cash. It's also similar in Indonesia, where 80% of the transaction that happens in the country is still cash basis. So the moment we say this to them, that they understand what we're trying to do, and what we're trying to build is we build infrastructure end to end where online transaction and offline can happen together.
And just to jump in here, was there anything surprising you in working with Japanese partners? Anything that you didn't expect?
I think is now I'm used to it. There are ways to do certain things. There are like step by step that you have to follow. So now I think if they say that, oh, we will try to do it in these steps, then yeah, all we have to do now is just say, let's just do it this. But I always told them that the end goal is we're trying to reach here. So sometimes during the steps, we need to do some certain things. So I think it's a dynamic between, Japanese and Indonesian working together side by side.
Good answer.
Very good. Pandu, we want to hear from you next, actually. How can SA startups position themselves to attract Japanese investors?
Yeah, thank you, Felix. So I think a little bit context about our business. We are focusing on automotive industry. And then our first product is literally giving out working capital to the used car dealer, right? To the merchant that's selling automotive products. And the biggest one is the used car. So, and this business is pretty much something that Japanese investors are very familiar with. A lot of incumbent multi-finance or the lending companies in Indonesia owned by Japanese companies. So I guess it's quite easy to share what we are doing, and there's a lot of alignment with the Japanese companies. And I guess with Broom, actually started the product as an inventory management system, as again SaaS. It also gives a lot of help in showing that Indonesia is really also going there in terms of technology advancement. So yeah, that's I guess where Japan and at least Indonesia and my business have a lot of similarities, and we can work together now.
Great. And maybe one more question to you, Bob. How would you address Japanese corporates? What is kind of the message that you would give to them if they're interested to invest in Southeast Asia? How should they approach it?
Well, if I talk from a Thailand perspective, Japan has been the number one foreign direct investor into Thailand for the last, I would say, 50 years. Historically, the ties have been very, very strong, not in the least because of the automotive industry. All the large Japanese auto manufacturers are in Thailand, and they are working very hard to become a regional hub to also do the migration to EV. So historically, there's always been even with the royal families have been very close over many, many, many decades. So I would address them starting with the historical ties and the trust that there has been. And I would point out some of the similarities where Thailand is actually starting to become one of the fastest aging societies in Southeast Asia. And you see that they've also been very much focused domestically. For example, in my business in the securities brokerage and trading, 90% of all Thai retail investors only invest in local Thai stocks. And what you see also there is a similarity with the Japanese economy. Thailand has gone through a last decade of very low growth. So 1 to 2% GDP growth annually, which is very low for Southeast Asian standards. So I think that Thailand can learn a lot from some of the Japanese companies because aging society, low growth environment, and a focus on domestic investment. How can we partner and take some of the lessons where, for example, the Japanese government is trying to revive the whole economic environment in Japan? If we can copy some of those measures and try to find out solutions how we can just address all the challenges that the aging society is going to bring to Thailand as well.
A quick follow-up question for Pandu. You love fundraising. You basically see you fundraising all the time. You can't get enough of it. So you're fortunate to have a lot of Japanese investors. You try to get more. So can you comment a little bit on what is different or what is helpful, what worked, what didn't work in building the relationship and advancing conversations?
Thank you, Dan. That's an interesting question because our relationship with Japanese investor probably dated 1.5 years ago. And I think, again, this is the anecdote that we always hear about Japanese investor being, I'm really sorry to say, like, oh, there's a lot of processes, there will be hundreds of emails. But honestly, our first Japanese investor was very quick in doing all these processes. And I think that's really opened my eyes as well that Japan is also moving in a very fast pace. And I think what went well, definitely the connection with the local the Indonesian related entities, the big banks, the multi-finance companies, really, really helpful. And I think they're really opened the door for us to, as a smaller player, newbie in town. I think we're very, very grateful that we have that connection. And I think lastly on things that I think could be improved. I think it goes both ways. Definitely, I need to learn a lot of Japanese language more and more. Probably there will be my OKR this year.
We will check next year.
Yeah, but I guess I think there's also a lot of SOPs that we want to sort of like improve, make things faster. Thank you.
Yeah, I think with the Japanese language, I'm in the same boat, more for personal reasons. But no, that's a great answer. Very good insights. I want to switch gears a little bit and talk about the magic word profitability, which sounds like music in the ears of the investors, right? And Jess, I would like to start with you again. What would you say how important is profitability in these times in Southeast Asia for a startup?
Yeah, I think in the country like us, right, where everything is very dynamic, it's very, very fast moving. We usually is the last country that follow what happened around the world, like in the US, what's going to happen in Korea and everything, where the tech is very, very booming. So once we heard about before, when we started the company, everything is about growth, right? So we focus on the top of the line. For me, it's as payment processing, we always say about volumes. And then later they start moving in things into when the economy start, like COVID happens and then everything start like a tech winter coming and everything. And then my investor start asking me to start focus on the bottom line. Now we chase revenue. And then for about a year and a half ago, now we start thinking, let's start doing about profit, right? So we're operating on profit at the moment. As a payment processing, I think I'm pretty sure we're the only one in Indonesia that doing that. But I think when investor invest in the founders, right? When they invest in the seed round in a company or a company that are very small, us as a founder, right? We need to follow whatever happens in the market. If the market is good, we enjoy the good capital, right? But when the market's not good, then we need to be responsible enough to be like, when investor asks us like, hey, you need to be profitable by this end, then we need to try to make that happen. So I think as long as I'm happy to say that my investor is very, very supportive, that they're very, very through thick and skin together with me. So
now, this may be an interesting point of profitability to clear out the myth that Southeast Asian startups are having challenges in becoming profitable. So we have 3 here that could be profitable if they wish or are already. I'm not going to look at anybody who is still trying to get there, but next year another thing we'll check. So that's a big achievement also coming out of COVID, that a lot of companies really cleaned up and achieved profitability. So on that note, would be good to hear a bit from Bob, how profitability has been for you and how you balanced coming out as a profitable company, then going back into high growth mode, high investment mode.
So as I said, we are a company that has been around for 58 years, but they still call ourselves a startup because 2 years ago, we started the complete transformation of our business. The Thai securities brokerage market is pretty much old-fashioned. It's still very manual, not really digitalized, and it's only saw the first entrance of a zero commission player a year and a half ago. So historically, the profits have been very high. We've been an EBITDA profitable company for many, many years. But we decided to see what's happening all around in the world and in the more mature markets. It will eventually come to Thailand as well. So profitability is nice. And I see a lot of our competitors who are shrinking to glory. The margin is eroding. The market volumes are getting down. And what they do, they are more or less denying the reality that's going to face them. They still believe that by maintaining the cost, etc., and not investing heavily in disruption, digitalization, that they can survive. We look at it differently. We got the vision that we want to be at the forefront of that transformation. But we also believe that we want to combine what I said earlier, our existing sales force, our existing advisory, and add digital to it, both front end and in the back end, to make us very, very lean in terms of operating, and in that we can just manage with lower margins.
Great. And maybe a final question on this topic also to you. What will be the major tasks on your roadmap to profitability?
I think as a lending company, definitely we want to reduce our cost of capital, hence why I'm here in Japan. So that will be, I think, my first goal for this year. And second, I think there's a lot of metrics that we're tracking, like revenue per manpower. And I think as a Series A company, that's pretty much our focus today. But with the projection, and I think we are really on track. I think we're hoping to get profitability or EBITDA positive at least by Q3 this year.
Well, I just want to add in one point about this profitability and on the investor piece as well. I honestly believe, like, if we are, I think when it comes to profitability, it's not so much because investors are asking us to be profitable, and 2 years ago they weren't asking us. I think it's at the end of the day, if you want to be masters of your own destiny, to grow your company, you have to be profitable. It's not a question of because someone's asking us. At Julo, we've always looked at unit economics positive, profitability, and we continue to do that. We turned operating PBT profitable December, and we're going to be fully profitable in 2024. So it's not just about revenue. We're already delivering 100+ million in revenue, but profitability as well.
Thanks. That's great to hear. I'll hand it over to Dan for the final segment.
Maybe we'll take one question from the audience. Could be a question, or if somebody wants to test Pandu's Japanese, that's fine too. One question. We have to cut. Okay, next year we'll take questions. Thanks everybody.
Thanks for joining us.
Thank you.
Thank you.